All right, what's up, guys? So welcome to the live stream today. I'm just going to do a quick update on Bitcoin and perhaps some altcoins as well. I'm not going to do any short requests or anything like that. I'm just going to be commenting on the Bitcoin and what I think. So I'm seeing a lot of let's go Birb and hey Birb. I'm obviously not Adrian. I'm not Crypto Birb. It's Libs. I have hair on my head instead of my cheek. Is this a cheek? What's this called? It's a cheek? No. This part of my face. What the hell is that called? Anyway, I'm not Burb. Anyway, so let's look at shin. Shin. Thank you, guys. It's my shin. I have a shin. All right, so we are like what we're seeing right now is it very much looks like a top, right? It very much looks like a top. So you have a double top, right? And like I've been saying in the past few days before we had this move lower, is you can't really watch this and say, all right, so this is a double top. You can't really say that when price is trading here. Of course, it could be a double top, right? Just like this could have been a double top, right? But it didn't, it broke above here, so that got invalidated. This then turned into I guess triple top or whatever, but this then turned into a pretty obvious distribution pattern up here. And we are seeing something similar, right? We are seeing something similar, and the fact that we have these tops right here and price then breaking down. Not really breaking down. It haven't really broken down yet, but it's coming down and it's testing that support below. So what you have is somewhat of a M formation, right? So usually when you have a like at the bottom, you will have a double top. Obviously not a double top at the bottom. At the bottom, you will have a double bottom, right? And at the top, you will have a double top. So that will look like one bottom, two bottom, right? A W. And at the top, you will have one top, two top, and then an M structure. So that's an M structure and that's a W structure. So usually what I do is I like to call them M structures and W structures instead of double tops and double bottoms, because it's just the idea is that you're supposed to be confirming this when the neckline of the M or the neckline of the W is broken. So if you have a double bottom like this, you have a breakout, right? And that is when the neckline of the W is broken. And that is when you can really confirm that this is a nice double bottom. I love to trade the double bottoms when you have something like this, a break and retest, right? And that's like my, that's a very good break in market structure, right? So what you have right now is either a double top, right? So either a double top, M formation, or a range, right? So a range obviously would look like this. You're just going to bounce support, rejection at resistance, and then bounce support. This is a range, something similar that we got right here, right? And then we broke range lows, which is this area, right? And that is what really confirmed this as a distribution pattern. When you broke down, you then entered a accumulation pattern when you have the break and retest right here. That confirmed this as a accumulation pattern because you had that last move upwards, right? So what I'm thinking here is, if we break this pattern to the downside, if we break support here to the downside, and of course it looks like it's going to break this level to the downside because we have red candles. In my case, we have gray candles, but of course it looks like we're going to break this level to the downside. If you would have one big fat bullish candle right here, you would probably think, oh, it's not going to break down. But we have to kind of set that aside. We can't just say it's going to break down because there's a bearish candle, right? Because if there weren't a bearish candle here, obviously we would think that the chances of this breaking down is lower. But it's not really like it's support. Whatever you think about seeing a bearish candle at support or a bullish candle at support, this is the second daily candle of this dump, right? So we haven't really, like, we're at support. It doesn't really matter if there's bullish candles or bearish candles here at support, we're still at support. So support will most likely act as support. That's quite logical, right? And when support has broken, that's when we really can confirm that support has broken. We can't really say at this point that, support, it's going to break down. Support is not going to hold, because we don't really know that until it actually breaks down. So what we have to do is we have to start thinking in different different scenarios, and we have to apply different probabilities to these scenarios, right? So first, when we look at a level and we ask ourselves, do we think that this level is going to break or not? First of all, I don't really think like that. What I do is I look at the overall trend, and if the overall trend is bullish, I say support has a higher probability of holding in an uptrend than in a downtrend. Obviously, in a downtrend, support would have a higher likelihood of breaking because the overall structure is bearish. On Bitcoin right here, the overall structure is very bullish, and you are in a local uptrend, a high time frame uptrend, but the very low time frame is obviously a bearish market structure. So you're hitting support in an uptrend, so chances are that this level will hold. So the first scenario, which I do think is most likely, I'm not saying it will happen. I'm not saying it will happen. I don't really care if it's going to happen or not, because I've planned for different scenarios. But the first scenario is that this level right here is going to hold as support. And why do I think that this level is going to hold as support? Well, strictly because we're in an uptrend and this is support, right? It's just simple as that. Support in an uptrend, support in a bullish market usually acts as support. Now, there's a couple of factors here that kind of makes me think that the level is weaker than on this retest, right? And if you watch my webinar on horizontal support and resistance, you know that support gets weaker with every touch. And you have a lot of wicks touching this level right here. And you have that big spike right here. And now we're testing that for the second time. But then it might be like the fourth or fifth time if you count these tests right here. So there has been a lot of tests of this level. This level is not as strong now as it were here, as you could evidently see from price action as well, because if this would be a very strong support, you would have that wick and then you would start trading higher, right? Another thing that adds confluence to this level as support is a daily 50 EMA. So if you add a daily 50 EMA right here, you will see that this is the first time that we're retesting the daily 50 EMA after breaking it to the upside. And why is the daily 50 EMA on my chart? Well, if you look at the last bull run for Bitcoin right here, you will see that the daily 50 EMA is a significant support on major retraces, right? Major retraces. Here you have a major retrace, 50 EMA holds, right? And it's been holding quite nicely on this up move. And you can see how price kind of likes to trade around this level. Like when I have moving averages on or trend lines or levels, I always have a buffer zone around it. So it's like it's not going to be perfectly on that level. You can also see here that you have wicks below, and here you see like it's likes to trade around this area, and that's because some people use the 55 EMA or lower and stuff like that. So people are going to use different EMAs, but I use the 50 because I've seen statistically when backtesting it has good. There's a good reason to use that, right? So this is a good level. I did buy some Bitcoin here and kind of fill up on my long-term holdings here. But when I bought here, I didn't enter with everything I had on the side, because I do think that we have a level lower, which is very interesting as well. So if we add the weekly 20 EMA right here, we're going to be looking at that, right? So we have the weekly 20 EMA right here, and usually in very strong bull markets, you usually come down and test the area around the weekly 20 EMA. And you can see here, for example, going back all the way to 2016, you can see here the weekly 20 EMA is the blue one right here. And you can obviously see here on the weekly chart how nicely Bitcoin has been bouncing off the weekly 20 EMA. I mean, I don't even have to circle it in. It's just so obvious, right? You see how it's in a major bull runs. It really likes to use the weekly 20 EMA. So all the way, like when we reclaimed it right here in 2015, if you would have used bot here and said, I'm going to be selling when you have like a weekly open and close or weekly close below like a significant weekly close below the weekly 20 EMA, you would have been in some massive profit, because it actually broke down at the top of 2017, right? So in January in 18, it broke the weekly 20 EMA. So it's obviously a very significant moving average to have on the chart when looking at Bitcoin on the higher time frames. You can obviously see here that it's not being used as nicely here, but then again, it's holding very nicely here, and then broke down here. And of course, it's not going to be perfect, right? It's not going to be perfect, and we don't know if that relationship is going to continue in the future. But you can see here that it did bounce very nicely around that area right here. And yes, I do count this as a bounce on, not exactly on, but in the area of the weekly 20 EMA. Same here with resistance, right? So that is something I'm watching lower. So the weekly 20 EMA, right? So do we have anything that is confluent with the weekly 20 EMA? Well, you can see here that you have a nice trend here. So why wouldn't we want to add maybe a trend line from that low to this low right here? And you can clearly see here that if we were to dump in today, and we're going to see some bearish market structure or bearish price action in the next maybe 3 to 4 days. Well, down here you have the weekly 20 EMA in very nice confluent with a ascending trend line. And the way I trade is you need 2 touches to confirm a trend line, and the third touch is the one you should be trading. You're probably going to hear a lot of people say that the more touches a trend line has, the more touches, the more it gets confirmed. But I believe that there's definitely an edge in, and a lot of people will say that you need 3 touches to confirm a trend line. So you need 2 data points to draw a trend line, but you need 3 data points to confirm a trend line. But I'd like to trade the third retest instead of waiting for that one to confirm the trend line. So if you have a bounce on the trend line and the bounce looks good, you have a confirmed trend line, and that should be your trade. For me, the best setups are, especially on my low time frame trading, my day trading, is when there's a horizontal level confluent with the third retest of a ascending trend line, just like we have here. So we have the weekly 20 EMA confluent with that trend line. Let's see if we have a horizontal level here. Well, obviously we have a very nice high time frame level right here. If you just use these highs and then that high right here, well, look at that. It's beautiful. You have a good reaction to that level right here. This is actually the level that broke the distribution range up here, that caused that massive 40 to 50% dump, right? So that is obviously a very significant level. And look at the violence of the reaction of that candle right there. That cannot be ignored. That's one of the most bearish daily candles in a very long time for Bitcoin. So that cannot be ignored. And also look at that daily wick right here. There's obviously a lot of interest in this area right here. So what now? Let's see if we can add something else to add confluence to this level. And something I like to use is the Fibonacci tool, right? So to add the confluence to the horizontal level, and remember, horizontal levels is the main focus here. So if there's confluence between a trend line and a fib level, but the horizontal level is above or below, the trend line and the fib levels make no sense. It has to be confluent with a horizontal level. Horizontal levels should be at the top of your list, right? The top of your list. So, Yeah, and by the way, guys, if you're not subscribed to the channel, I mean, this is a private live stream, so but we have a lot of people in here. So if you're not subscribed to the channel yet, you probably should be, and hit that subscribe button if you're not subscribed already, because after the Congress, we're going to be releasing a lot of videos on a daily basis. On a daily basis, we're going to have videos, maybe not as in depth as this one, but definitely similar. Right, so let's look at the fib tool, and I want to show you my template for the fib tool, so you can just pause the video or check the replay of this live, and you can look at the settings that I have for my fib tool. So I'm going to open it up right here. You see the fib retracement tool. You look at style, and these are the fib levels that I have. So you can pause the video and copy this and make an own template of your own, or just watch the replay. And then I have a lot of different templates right here, and the one I like to use the most here is the template where I have the reload zone and the 50% fib, and I'm going to show you why. So here's the reload zone plus the 50% fib, and you will see here that, and by the way, the reload zone is the area between the 0.618 and the 0.786 Fibonacci level. If you're not sure what reload zone is, or what the RLC is, which is short for reload zone, you can probably just Google LiBZ42 plus RLC or LiBZ42 plus reload zone, and you're going to be finding videos of me explaining what the reload zone is all about. So you see here that if I draw the fibs using this low, and by the way, guys, if you're not really familiar with the Fibonacci tool, you're always supposed to draw the fib tool forward in time. It doesn't matter if you're going to be finding support levels in an uptrend or resistance levels in a downtrend. It's always going to be forward in time, always forward in time. If you draw it backwards, it's going to be inverted and the levels will not be correctly drawn. I mean, there's no rules on that. You can trade that way if you want, but it's not going to work. So you have that low and then this high right here. And you see on this move right here, we came down and we touched the 50% fib right here. Okay. And that is very normal. It's very normal that after a big move, you will see a correction, and a healthy correction is supposed to come down and test the 50% fib, or the area between the 50% fib and the 618. When you go down into the reload zone, that's really where you get the deep retraces, and that's where you can accumulate a position, because that's most likely where you will have the high time frame bottom or the very deep retracement bottom. But in a high momentum bull market, a healthy retrace usually comes down and tests the 50% level. Now let's see where the 50% level is on this current move right here. So we're going to be using the same template, but we're just going to be adding it on this move instead. So as you can see right here, if I extend this one to the right, you will see that you have the 50% is right here. And right between the 50% and the 0.618, you have the weekly 20 EMA. So the weekly 20, like this is what we call confluence, right? Right on that horizontal level, which is a great horizontal level, you have the weekly 20 EMA confluent with the trend line, confluent with the area between 50% and the 618, right? So yes, it does look like and if you add some arrows here, you will see that the picture perfect uptrend is this, right? Higher high, higher low. This is pretty much the picture perfect uptrend. So if everything goes exactly according to the rules of TA when it comes to the perfect trends, Bitcoin will most likely hit 52K if we lose the daily 50 EMA, right? So if we lose the daily 50 EMA, I'm going to look for a bounce somewhere around 52K. And of course, there's a very high probability that this very high confluence area will be front run because everyone is looking at 52K. All right, you look at Twitter, you look at the Birb nest, everyone is talking about 52K. Everyone is looking at 52K, which obviously, when that happens, you're probably going to bounce at around 54K or lower at 48K. You're very unlikely to hit the level everyone's talking about, but because Bitcoin is not moving according to logic all the time. It likes to really surprise people and do what we least expect. And honestly, I think what we least expect at this point is for Bitcoin to really pump right now, today. A lot of people are seems to be getting more bearish and bearish at these levels at support. So I believe that what would surprise people the most is if we actually bounce here. What would cause the most pain would be to see a wick down to 50K, which still, remember, a wick down to 50K would still be very healthy. It would be a healthy correction in an uptrend. It would be the picture perfect bullish throwback. That would be causing a lot of panic in the market, and I think that would be a fantastic buying opportunity. So again, I've been buying some Bitcoin here and filling up on my altcoins, but I will not be buying more at this level. However, I am planning to buy much more down in the 52K area where we have the weekly 20 EMA, if that happens. All right, so let's see if we have any questions here. Okay, so if we see 58K broken, should we TP for Litecoin right away and re-enter when BTC bounces from 52K? I obviously missed the TP1 on Litecoin, and this is my learning for the future. Right, okay, so I have a Litecoin position. About 10% of my portfolio is in, well, I think about 9% of my portfolio is in Litecoin, while 25% of my portfolio is in Bitcoin and 20 in Ethereum. So I don't have a stop loss on Litecoin, because I'm viewing everything right now from the perspective of Bitcoin. If Bitcoin loses this level, I know that my altcoin bags will suffer quite a lot, and my portfolio will suffer quite a lot. But I'm not going to start to worry unless we lose this area right here. So when it comes to your question on Litecoin, I think it's very important here to remember that you should follow your plan, right? You should follow your plan. And if you don't have a plan, you should exit the trade and make a plan and then enter the trade right away. So it's very hard for me, and it's not really nice of me to tell you what to do, because I don't know what you should do really, because you're a totally different person than I am. You have very different goals and ideas of trading and trading styles and that kind of stuff, right? So it's very important that you follow your style, your system, your rules, and your plans. Now, if you don't have that, well, you've started at the wrong end. You need to go back to the drawing board. You need to write your rules, your plans, your goals, your methods, your system, and all that, right? You need to write a trading plan before you actually enter a position, right? Because when you have a plan, there's no cause for worry, right? You don't have to panic if you have a plan. I know, for example, that if we lose this area, I'm going to be de-risking. I'm going to de-risk my whole crypto portfolio, because if we do lose this area, I don't know how far we're going to go, right? I don't know how far down we're going to go. And, if we start going lower and maybe, lose 40K, I want to be out of crypto, right? I want to be out of crypto and then look for the major bottoms, right? The major bottoms. And I don't think we're going to go below 40K. I don't think we're going to go below 50K. And that is why I'm keeping my exposure. But I am okay with a 13 to 15% move for Bitcoin to the downside. Yes, I will lose a shit ton of money if that happens. I will lose a fuck ton of money if that happens, but I am bullish on this short right here, and I do believe that the dips are for buying. And I guess you have to take a risk when it comes to trading. Right now, I believe this is my biggest trade in probably my career. So the idea of buying this dip that we're currently seeing right now, and then the dip lower at 52K, that would involve a position that I probably haven't had such a big position in the crypto market like this one. So do you ever place orders in anticipation, or do you want to see what price does? Well, when I'm trading, when I'm day trading, when I'm trading my day trading portfolio, mostly forex and of course some altcoins as well. I never day trade Bitcoin, by the way. When I'm doing that, I always wait for confirmation before entry. So I have a very specific entry trigger, which is, hitting a confluence area, and I want to see a stochastic RSI bull cross with a 4-hour bullish engulfing or a break in market structure on the lower time frames. That is my entry trigger. When I see that, I market buy most likely. I never enter orders, lower to be able to kind of get some wicks and that kind of stuff, because imagine if we just but you know what, that might not be a bad idea, that because I've been kind of sitting here and explaining to you guys, I think this level will hold. So yeah, I guess it wouldn't be a terrible idea to put orders down here. But really what I'd like to see is what if price just moves like this, right? It's a small little move here, then just down like that. Well, I don't want to be buying that. What I'm looking for is something like this, right? Just some sign of strength, some sign of bullishness down here, and that is when I will start to buy. I started buying up at the current prices. I started buying when we had like that wick. I thought, well, you know what? Looked at the 1 hour. I'm really liking. I like that wick right there. So I'm just, fuck it. I'll just buy that one. Right? So I added some exposure to that one, and really also what I'm thinking in this case is we're now in a local downtrend, right? To confirm this as the bottom, we kind of have to see something like this. And when I see this, I will be adding more, right? So I'm waiting for confirmation to add more, because this might break down. And obviously, going through the analysis that I've just done with you guys, I'm thinking that it's the more time we spend down here, the more likely it is we are going to move lower, right? Can you do the short scenario where Bitcoin hold and pump the 50 EMA in a daily? Yeah, okay. Like, that's not really hard. It's going to look like this. I mean, honestly, it's going to pump. But I think I just showed you, what is this? What is this? But yeah, I think kind of what I just showed you. So the scenario that this is the bottom, you have to kind of confirm that this is the bottom, right? So we look at the 4 hour and you look at the closest resistance above. If you really want to confirm that this probably most likely is the bottom, you look at this resistance area right here. And if you get a like a break and retest of this level right here and a reclaim of the 61K or 60.5 or something like that, I would definitely start buying more if that happens. So yeah, that probably answers that. So usually I don't really look at funding and the amount of leverage in the market right now. I don't really look at that in my analysis. Like I'm focused on price action, right? So I wait for price to do something. Looking at I guess there's two ways to analyze, right? So you have the first method of trying to predict where price is going by using certain indicators and sentiment and maybe on-chain analysis and stuff like that. And that is very valid way of doing TA, very valid way of doing TA, probably much more time consuming and more a bit more advanced that I'm doing. I'm more of a reactive trader, so I'm waiting for price to do these things, right? So you might look at Aperture, for example. He's reading liquidation data, order books, heat maps, that kind of stuff, right? And he might say that, right, so we have this divergence right here. We have a liquidation happening on a larger scale right here. I think because of this, that this is the bottom, right? So he might buy the very close to the bottom, right? So he might be buying very close to the bottom while I'm just sitting back, relaxing, and I'm waiting for that bottom to be formed, right? So when he probably gonna have a better return on the trades, but I'm just waiting for that to happen. So while he's doing the analysis and making a little bit more money, I'm gonna be spending much less time, and I'm just going to be waiting for it to happen instead. So I'm just going to be observing the market and just putting in alerts. I'm just going to be waiting for that to happen. I'll make less money, but I'll be working way less and spending way less time looking at the charts and doing analysis because I'm following price. I'm just following price. So if price does this and that, I will enter. And I don't really care about the in-depth analysis of other advanced indicators other than what price really is doing. And there's nothing wrong with method 1 or method 2 or whatever. It's just a matter of what fits your personality the most. I know, for example, Aperture is a coder, and he really likes to dig deep into the data, right? The data of trading, and I don't like that, and I don't really care for that, right? So I take the more simpler and less stressful approach, basically. So you're going to be seeing a lot of people posting a lot of different shit on Twitter, like, look at this indicator and look at that indicator. You got funding rates here, you got liquidation data here, you got heat maps here and order books here. And you will see the new traders, they will retweet this or they will send that tweet to me and like, what do you think about this? And I'm like, I'm not thinking about that, but he's thinking about that. And then you have another tweet about something else, and I get a DM saying, what do you think about this one? And I'm like, I don't think about that one. And those two tweets with examples of what they're looking at is from two different people, right? And they might not even be looking at the same thing. You know, they might not be looking at the same data, but new people come in and they look at everything, right? So you have one on-chain analysis saying this and that, and then you have an order book trader or heat map trader, whatever, saying this and that, and new traders try to look at that, and then you look at this and you try to combine it, and you're like, but you got to realize that these two people might not even be looking at each other's analysis, right? Because they have very different systems and different strategy, and that is what you need to do. You need to develop your own system and your own style and your own trading style. And for me, that is price action mostly. So you can have two ways of trading, by price or by fundamentals. People have said that trading by price is not right. No. Well, all right. So if you say that, so if you say that price action trading is wrong, you're probably in the wrong place, right? So you're probably in the wrong stream. So fundamentals move price, right? Fundamentals happening move price. So if, for example, Bitcoin experience a flaw in the code, a serious bug, it's gonna dump, crash massively, right? And you know, TA is not going to be able to predict that, right? But you're going to be able to trade it on TA, because TA will react to that, right? So whatever stuff you got going on in the world, you will be able to notice that, like macro events and fundamental events, you will be able to notice that in price action. But it's a fact that fundamentals move the market, and the best type of trading is done when you have fundamental analysis and you combine it with technical analysis. So FA plus TA is obviously the best type of trading. So if you can figure that out, is good, great. If you can use fundamental analysis, like if, for example, you look at the rate of inflation, you look at what the Fed is doing, and you combine that with on-chain analysis, and then you look at price action, right? That is a perfect, great combo to create a trading system based on FA and TA. But I've been trading based on price action for about 4 years, and I've been quite successful doing that. So whoever says that trading by price is not right, well, they're obviously right that it's not right for them, because if they were successful doing that, they would not say those kinds of weird stuff. The whole thing about TA is you look at price history and you say the patterns that have been evolving in looking back at the price history will most likely repeat itself. You know the saying, history doesn't repeat, but it rhymes, and that kind of, that's pretty much TA in a nutshell. So yes, TA works. Trading by price works. It's obviously it works. Trading by FA works as well. Trading by gambling works as well in some points. You know what I mean? It's you have a dart, and you so we did this in 2017. So, well, basically what I did in 2017, when everything was pumping, I went on a Bittrex and I looked at which coin is pumping the most, and I bought that one. And that was my strategy. I had no strategy. I was a new trader, had no idea what the fuck I was doing. But I went on the Bittrex and I'm like, which are the coins which have pumped the most? I'll buy that one. I'll go all in on that one. And that was an extremely profitable strategy, because the FOMO was everywhere. If something pumped 100%, you could be sure that it's going to pump 200% more. That was such an insane market. You could literally just throw a dart at a board and make a shit ton of money that way. Right. So before we end, we're going to take a quick look at Litecoin and Ethereum. But honestly, I don't think there's much to look at on Litecoin and Ethereum, because we have to look at Bitcoin. But let's take a look at Litecoin and Ethereum. Right, so here we have Litecoin. And what's happening right now is we're coming down to retest the breakout area. This is a very good retest. It looks absolutely fantastic right here. So this is a very, very good retest right here. And if you look at the bigger scale right here, you will see that Litecoin had a very, very strong move to the upside right here, and then it dumped and it started to accumulate inside the reload zone. And the way I sometimes like to trade the reload zone is you have some type of double bottom inside the reload zone, and then you have the 50% here. So you have a double bottom, break and retest of the 50%, and that's pretty much what we're getting right here. You can see our price moved out of the reload zone, and it's now coming down to test the 50% fib right there. And if you go to the 4-hour and you add the fibs to the breakout move, like the major breakout move, which is this one right here, you will see that you have the reload zone of the lower move right on the 50% of the bigger move. So yes, I do believe that this could be a very good buying opportunity for Litecoin. It's a very good area to buy Litecoin if Bitcoin bounces. So if Bitcoin bounces here, which I think is likely, but I'd say 50-50 at this point. All right, I'd say we're losing the daily 50 EMA here, so I'd say it's a 50-50. We could pump here, we could dump. Yeah, it's very hard to predict. Obviously impossible to predict, but I'd say 50-50, something like that. I can't even say 50-50. It just sounds stupid to say that, but you know what I mean. So yeah, if Bitcoin holds this level, absolutely fantastic place to be buying Litecoin. I personally don't really like this coin, like this shot that much, but I kind of do because I have a bag. So there's something about this shot that kind of makes me want to be exposed to this. And I'm looking at I'm personally like, if the altcoin season really starts, I'm looking for a move up to the like 650 or at least 600 area for Litecoin. So that would be a nice nice 150 to 200 move to the upside. So yeah, if Bitcoin can hold the current support, this is a great area to be buying on Litecoin. Otherwise, if that doesn't happen, probably should probably look at the monthly open or the $200 area. So the $200 area would be a good support if that happens. But you know what? If Bitcoin drops the 50 MA, who knows how far down all coins are going to go. So if that happens, we have to probably make a new plan if that happens, because the current market structure will be very, very different if Bitcoin loses the current level that we're in. And look at Ethereum, a very obvious break of trend here, break of the 4-hour market structure. We are now coming down to test the daily 50 EMA. And look at this. It's actually testing great support here. So this is usually something you will see. Bitcoin is testing support and all coins are testing support at the right time, at the same time, right? As you can see here on the daily, obvious support right here. And we can also look at like, where did this what fib did Ethereum bounce on last time? Well, like I said, the area between 50% and the 618 is a good area usually for a bounce, and that's exactly what happened on Ethereum right here. So let's see where the 50 and the 618 is on this move. Well, it's going to be way lower than where we currently are right now. So look at this. It's going to be the same for Ethereum and Bitcoin. So if we lose current area on Ethereum, it would be the same as losing the current area on Bitcoin. Are we pumping? Yeah, we're pumping. Ooh, I can feel that. Felt like a really nice feeling just seeing that. I'm way too emotional when trading. It's like, yeah, fuck yeah, just pump it. That's not. I'm supposed to be unbiased and like put my feelings aside, but who does that? Like, and it's like, you have to be a complete psychopath to be not able to just put your feelings aside when trading, because honestly, we all feel feelings. So if somebody tells you like you shouldn't be feeling feelings when trading, well, that person is stupid. You should obviously be feeling feelings, and yes, you should be trading your feelings. The key is to identifying which feelings are the ones too long and short. You know what I mean? But yeah, pump it. So yeah, look at this. Ethereum, absolutely fantastic level. Absolutely fantastic level to be buying. And you know what? Which is a better level? Well, probably down here. But that's not going to happen if Bitcoin, Bitcoin doesn't dump. So what would confirm this? What would confirm this as the bottom for Ethereum? Well, let's see, a break in market structure, right? So perhaps something like this. You have that low and then the high, you have the low, something like this would be, would make sense. That would be a logical move for Ethereum if it's bullish. So a break and retest of the monthly open. Perhaps something like this. So a reclaim of the monthly open would be very strong for Ethereum, and that would definitely show a sign of strength. So what I'm worried about at this point is the fact that it all seems so obvious. All right, it all seems so obvious and very unlikely going to happen, because Bitcoin does not like doing the obvious. Bitcoin likes to screw everyone. All right, and that is why I don't trade Bitcoin or altcoins at this point on high leverage, because all you need really, like, imagine how many liquidations we have down here. I'm pretty sure we have a lot of people revenge trading at this point. They're like, fuck, I lost everything because I'm over leveraged. So there might be people, who bought this break, and I'm like, yes, Bitcoin is going to 100K, which means I can buy Bitcoin with 10x leverage. or 50x leverage because it's not going down. So I'm not going to get liquidated. And boom, you have a lot of liquidations happening right here. And people are like, well, that kind of sucks. I've just lost 6 months of profits because I'm stupid. So now I'm going to be buying again at support with 50 times leverage once again because Bitcoin is still going to 100K. And that is the max pain scenario, right? That's a max pain scenario. The people who lost a lot of money here loses more money here, all right, by getting stopped out. And that is when we reverse, right? That's what that would be the low time frame capitulation move when people is, oh fuck it, I'm out, I'll be lost everything, or Bitcoin is a scam, this is it, I'm done, I'm out, and boom, we pump, right? But that is on a lower time frame. I mean, this was really a good example of a capitulation move right here, like that candle right here. Look at that, be insane. That daily candle right there, that was a pure strong capitulation move where a lot of people just left the markets, right? Because they obviously you're looking at this, you look at this and you're like, yeah, it kind of looks like it's over, it kind of looks like it's over. Bitcoin had its run, it's over, it's done, it's going to 10K, and obviously it makes sense. It makes sense for this run to be over, and we're not seeing that. We're not seeing that today, and perhaps we're not going to see that. But if we do see that, it's time to really, for the markets to kind of flush out all the over leveraged longs, and really like people watching this, everyone. I would really, urge you to, if you lost a lot of money during this dump, try to learn from that, right? Try to go through your trading journal and your trading history and try to figure out, like, why did I lose money? What happened, right? What really happened? Because that is a learning experience, right? When you're losing money, you should view that as a trading course. You just bought an expensive trading course in what not to do, right? So it's very, very important to remember that whenever you lose money making a stupid mistake, you're supposed to say thank you for making that mistake. I've now learned something to help me in my trading journey. It's that simple. Mistakes in trading is what really creates good traders. There's nobody out there who's, no good trader will ever, tell you, that losing sucks or something like that, because losing does not really suck when you were a professional trader. It's a gift to lose, because you go through your losers, and that is where you, if you're really lucky, it's on the losers where you will find the golden opportunities, right? That's how I've developed my system, right? I've started with the break and retest, and used trial and error. I wonder if this works, if this doesn't work. I went through my losers, and I saw that you're supposed to put your stop loss lower. So I started putting my stop loss lower, which in effect didn't stop me out as much. And you do small stuff, right? So if you lost money on this dump because you thought that Bitcoin was going to break out and you increased leverage, holy shit, look at this. This is beautiful. What is going on? 4-hour stochastics, boom. You see that? God damn, look at that. 4-hour stochastics is about to put in a bull cross in 1 hour. And if we can close above this level, I would love that. Love that. So, guys, please, if you've lost money here because you've over leveraged, you're going to be losing money here as well if you're over leveraged and use revenge trade. So better to use low leverage, 2 to 3x or something like that. Start accumulating altcoins that are strong in relationship to other altcoins. We can take a quick look at my green list here. See if we have any altcoins that are looking strong in relationship to rest of the market. Sol right here, well, look at that, in the reload zone. So Sol is in the reload zone. Everything will probably be in the reload zone anyway, but yeah, so Sol, very nice buying opportunity here if Bitcoin bounces. You have BNB, Same thing here. Well, not really. BNB isn't really looking that good. Ethereum, great. HNT, still in this one, crazily enough. TRX, also probably a fantastic buying opportunity for TRX here as well. Again, bet testing the daily 50 EMA. So yeah, all coins are really testing some seriously. This is a strong coin, all right? This is probably the strongest coin in the market right now, AVAX. I mean, look at this, almost at the highs already. It's absolutely fantastic. So if you want to buy an altcoin, this is strength right here. So look at strength, and AVAX is showing strength. And we got BAT right here, beautiful retest after a major breakout. Look at this, daily breakout level, getting retested, monthly open, daily 20 EMA, good level. BAT looks pretty cool. I would like to see a reclaim of weekly open. And Chile's somewhat strong. Dash not looking strong. Sand looking very, very strong. And SXP now strong. So right now, the most interesting coins right now in the market is Sand and AVAX, from just doing this quick list right here. LTC is pumping. Now, what I expect to see when I see somebody write pumping is a big ass candle. All right, big ass candle. And it's kind of pumping. And you know what? It's pumping right inside the reload zone. All right. So yeah, it does look good. I'm hoping this is the bottom, because if it's not, we are see you guys at McDonald's. We might be able to open up our own McDonald's if we're lucky. And we can just eat burgers and just chill out in our own restaurant. Think about what could have been, you know? Crow, yeah, I have a Crow bag as well. 2% of my portfolio is in Crow, which is crypto.com. Fuck me, look at this. Wow. So the reason why I bought this is because you know, I was talking about on in the Burbnest end of October, I was talking about how the breakout here will be massive, right? Massive. And yes, I bought a bag here, up quite significantly. It went from like 0.5% of my portfolio to now being 2% of my portfolio. And I'm just keep on holding this. This is absolutely fantastic. This is a strong shot like right here. And yeah, it's looking phenomenal. So yeah, I do think that it's looking good. I'm liking this. I'm liking the current market structure, current bounce on Bitcoin, but it's nowhere near confirmed, right? So I have my alerts. I have my alert at 61.2 or 3, and I'm gonna be looking at possibly buying more if that happens. All right, guys. So I'm done with the webinar. So again, I said I was going to do 20 to 30 minutes, and here we are 50 minutes later. It's always like that. My sense of time is non-existent. It's because I talk too much. I try to explain stuff, and it takes, you know, some and a normal person will probably be able to explain something very simple in 2 minutes, but I have to spend like fucking, you know, 45 minutes to explain it, because I don't know, I used to get stuck in my own explanations. But hopefully you guys like that I'm spending a lot of time explaining stuff, because I know that we have a lot of different people with different I was gonna say different IQ, but that's just gonna be rude. Obviously, like, I don't mean that. Like, why did I even say that? I mean, we have different people with different learning capacities, and they learn in different ways. So if you know what, thank you for today's webinar. I love you all, and thank you for watching the webinar today. See you guys in the next one. Take care.